As we mentioned, FedEx sinking after hours. It is now down almost 10%. Its earnings call is underway. Frank Holland is at headquarters with more. And Kramer this morning said, this is what to watch today, FedEx. And I don't want to watch it, Frank. It's making me queasy.
Hey, Joe, certainly a lot to watch here. FedEx shares falling sharply after reported a miss on the top and the bottom line, as well as weak guidance for the full year. CEO Fred Smith saying performance continues to be negatively impacted by trade tensions. As you mentioned, the call starting just minutes ago.
Beginning in the fall of 2018, it had become clear that global trade disputes were adversely affecting manufacturing in Europe and Asia, thereby slowing international shipping demand.
So trade a big concern. FedEx also admitting that ending its contract with Amazon for ground delivery will hurt EPS this year. Last quarter, it said that ending the Amazon contract for express air delivery would also hurt EPS. After the bell yesterday, FedEx announced no surcharges for holiday home delivery this season and rate increases for home delivery and freight delivery starting in January. It's part of the company's plan to focus more on domestic e-commerce. Today, the company is saying it's dealing with increased costs for its ground business as part of that plan. Certainly not a shock there. So Amit Mehrotra of Deutsche Bank downgrading FedEx just a short time ago after the earnings were released. And also we're looking at UPS. Those shares trading lower. The two companies with very similar businesses, but very different 2019s. UPS up more than 20% year to date. FedEx down 2% year to date. Christian Weatherby of Citi saying today's drop for UPS is a direct result of FedEx's weakness. Back over to you.
Thank you, Frank. Well, Chris thinks that despite FedEx, the transports are about to rev up. He's at the plasma to break it down. That's a contrarian notion, I think, Chris, is it not?
I think it is a contrarian notion, and certainly FedEx down 10% after hours. I want to remember this 150, 55, 56 level. We'll talk about that in a minute. But the bigger question is there a read from what FedEx just told us about the broader transportation group? And I want to show you a couple charts here that I think are important. This is the transports, Dow Transports, still below the highs from 2018. But what is already breaking out is the transportation advanced decline line. So if we took a cumulative sum of all the shares, that has actually already made new highs. So breadth under the surface for the transports is actually pretty good. We also see that with the number of transports making 1 month highs. You had almost 75% of transportation stocks make a 1 month high over the last several days. So again, you see that expansion in new highs, the AD line making new highs. The breadth under the surface for this group is better than it gets credit for. Now, we see FedEx certainly down after hours. I think the big test for this one, if we're going to view this as a bellwether, can it respect that 150 level that's provided support 3 or 4 times now over the course of the last 12 months? Going to be a very important level there. But what I want to focus on from the long side is UPS. This is a better chart. It's already started to come out of its downtrend. You had a pretty severe bear market here over the last 2 years. We've started to see that reverse. 50-day back above the 200. I think any pullback in UPS is probably one you want to buy. And if you look at some of the rails here, which corrected over the last number of weeks, Kansas City Southern, I actually think is coming back. This is KSU over the longer term, has broken out of this really big base. And if we took this back longer, 10, 15, 20 years, it just came out of a very huge base. So we like the message from KSU, breaking out, UPS, a leader in that space, breadth within the transports, better than people give it credit for. FedEx is the outlier. We've got to see if there's a read, but I think overall you want to be long transports here, and certainly a contrarian call.
Chris, come back over here, because that is an important call. If you're right about this, your whole worldview should change a little bit. And Mike Wilson should have gone from 3,000 on the low end. No, I mean, but if you're right about transports, that does not indicate a recession. Well, and the overall market, if you believe Dow theory at all, the overall market eventually catches up with the transports.
And we think of Dow theory in 2 respects. There's old Dow theory with the transports, and there's new Dow theory with the semis, right? And we have the transports improving under the surface, and the semis already there. So I'm reluctant to get too bearish here.
Well, I would just say this. Let's not let FedEx avoid all the blame for this number. FedEx basically just talked about the global economy. FedEx has had a lot of issues that they've brought upon themselves. This is actually, Deutsche's note says this. A lot of people are saying this. I would say this. I think Fred Smith is fantastic. I actually said to buy the stock at 155, which is basically where it's traded back to. So I kind of like the trough valuation. But their CapEx is unending. They bought aircraft at the peak. They haven't really integrated Express as well as people expected. I think, so this speaks to Chris's point. FedEx's problems might just be FedEx right now, even though we know the world isn't a great place, but it doesn't mean it's a disaster.
And I think they are FedEx problems, and obviously UPS outperformance says a lot about that. But let's not forget, this stock made a $20+ move just since September. Yep. So, I mean, the fact that it's pulling back and their guidance was weak, and like you said, some of the integration's just not going well, I think that is much more of a FedEx problem than a UPS, than the rest of the transport.
The beta on that stock after it reports is crazy.
Right.
For years and years and years every quarter. Yeah.
Well, I mean, if you think about what the problem with FedEx is, it's Europe, it's Asia, it's the trade war. What doesn't necessarily have that trade war? It's the rails, right? And if you're going to have supply chains come back to the U.S., the rails in the longer run might benefit from that.